Welcome to the world of finance. Imagine waking up one day to find that your life savings, the money you've worked so hard for, is worth less than it was yesterday. Sounds scary, doesn't it? But that's the harsh reality of cash devaluation, an often overlooked risk that can erode your wealth without you even noticing. But don't worry, we're here to guide you through this complex landscape. In this video, we're going to debunk the myth of cash security and introduce you to 10 different assets that can help secure and grow your wealth. So, buckle up and get ready to embark on a financial journey that could change your life forever. Is keeping your money in cash the safest way to protect your wealth? Think again. It's a common belief that cash is king, that it's the safest asset to hold. But in reality, this couldn't be further from the truth. When you keep your money in cash, you're exposed to several risks that can erode your wealth, and these perils often lurk unnoticed. First up, we have the silent destroyer of wealth, inflation. Inflation is like an invisible tax that chips away at the purchasing power of your money. Let's say you have $1,000 today. Due to inflation, that same $1,000 will buy you less in a year, even less in 2 years, and so on. Essentially, your money is losing value over time, and it's happening right under your nose. Next, we have devaluation. This is when the value of your money decreases compared to other currencies. If your country's currency devalues, the same amount of money will buy you fewer goods or services. It's like waking up one day and finding out that your money is worth less than it was yesterday. And let's not forget about risks like theft or loss. Cash, whether it's in your wallet or in your bank account, can be stolen or lost. It's as simple as that. But don't worry, there's a silver lining to this cloud. There are alternative assets you can invest in to protect and even grow your wealth. Assets that are more secure and can offer better returns than cash. These assets range from stocks and bonds to real estate and even cryptocurrencies. Investing in these assets can help you hedge against inflation, currency devaluation, and other risks, offering a safer and more profitable way to protect your wealth. So if cash isn't king, what is? Let's dive into the 10 assets that can better secure and grow your wealth. First up on our list is stocks. Now you may ask, what are stocks? Well, simply put, stocks represent ownership in a company. When you buy a stock, you're buying a piece of the company and become, in effect, a part owner. This means you get a share in the company's profits, and as the company grows, so does the value of your stocks. But hold on, it's not all rosy. Stocks can be risky. The value of a stock can go up, but it can also go down, sometimes dramatically. It's not unusual for a stock to lose half its value overnight due to a bad earnings report or some unforeseen event. So investing in stocks isn't for the faint-hearted. However, the potential rewards can be high. Over the long term, stocks have historically provided higher returns than other investments, like bonds or savings accounts. And if you're savvy and do your homework, you can pick stocks that not only grow in value, but also pay dividends, providing you with a regular income stream. While stocks come with risks, they offer a potential for high returns, making them a compelling alternative to cash. Next, we have bonds. Now you might be wondering, what are bonds? Well, they're essentially IOUs issued by entities, usually governments or corporations, promising to pay you back with interest over a certain period of time. Bonds are a great way to earn a steady income stream, as the interest payments are made regularly. But like any investment, bonds come with their own set of risks. The main one being that if the issuer defaults, you could lose your investment. However, this risk is usually quite low, especially with government bonds. On the flip side, the potential rewards are worth considering. Bonds can provide a regular, predictable income, and they can also increase in value over time. This can be particularly beneficial in times of market volatility when other investments might be underperforming. So if you're looking for an investment that can offer stability and a steady income, bonds are definitely worth considering. They're not as flashy as some other assets, but they're a tried and true method of preserving and growing wealth. Bonds, with their steady income stream, can be a safer bet for those looking for stability. Moving on, we have real estate and gold, two of the oldest and most trusted forms of wealth preservation known to mankind. Let's break them down, shall we? Starting with real estate, it's not just about buying a home to live in. Real estate as an investment has a twofold potential. It can provide steady income through rentals, and it can appreciate over time. The beauty of real estate is its tangibility. You can see it, touch it, and make use of it. It's not just a number on a screen, but remember, real estate isn't without its risks. Markets can fluctuate, properties can sit vacant, repairs can be costly, but with careful planning and management, the benefits can significantly outweigh the risks. Now let's talk about gold. This shiny metal has been a symbol of wealth and power for centuries. It's not just for show, though. Gold has real value. Unlike paper money or other assets, gold doesn't corrode, it can't be printed at will, and it has a limited supply. These attributes make it a great store of value. When economies shake, gold often stands firm, sometimes even soaring in value. This makes it a fantastic hedge against inflation and economic uncertainty. But as with all things, gold isn't foolproof. Its price can be volatile. In the short term, it doesn't yield dividends or interest, and it costs money to store securely. However, when held for the long term, gold's luminous qualities often shine through. In essence, while both real estate and gold come with their own sets of challenges, they also offer unique advantages. They serve as tangible assets that can weather economic storms and preserve wealth over time. So, whether you're looking to invest in bricks and mortar or in the gleam of gold, both can offer a sturdy foundation for your financial future. Real estate and gold can act as a hedge against inflation, making them valuable assets in any portfolio. The next three assets on our list are mutual funds, ETFs, and cryptocurrency. Let's start with mutual funds. Mutual funds are essentially a pool of funds collected from multiple investors that are managed by professionals. These funds are then invested across a variety of securities such as stocks, bonds, and other assets. What makes mutual funds interesting is that they allow individual investors to participate in diversified and professionally managed portfolios, which might be out of reach for them otherwise. However, as with any investment, they come with their own set of risks and rewards. Next up, we have exchange-traded funds, or ETFs. They're similar to mutual funds, but with a key difference. ETFs can be bought and sold during the trading day at prices that may be more or less than their net asset value. This makes them a flexible option for investors who want the diversification of a mutual fund, but with the trading flexibility of individual stocks. And then there's cryptocurrency. A digital or virtual form of currency, cryptocurrency uses cryptography for security. The most well-known example is Bitcoin, but there are now thousands of different cryptocurrencies available. Investing in cryptocurrency can be a bit of a wild ride, with potential for high returns but also significant risk, including the risk of total loss. It's not for the faint-hearted, but for those who are willing to take on more risk. It can offer exciting opportunities. So there you have it, mutual funds, ETFs, and cryptocurrency. Each of these assets brings something different to the table. Mutual funds offer professional management and diversification. ETFs provide the same, but with added trading flexibility. And cryptocurrency, while risky, offers the potential for high rewards. These assets offer a mix of risk and reward, providing opportunities for both conservative and adventurous investors. Rounding off our list, we have commodities, index funds, and art. Commodities like gold, oil, or even coffee are raw materials that can be bought, sold, and traded. They're tangible and their prices fluctuate based on supply and demand, making them a potentially lucrative investment. Next, we have index funds. These are a type of mutual fund designed to follow certain preset rules so that the fund can track a specified basket of underlying investments. Index funds can offer broad market exposure, low operating expenses, and low portfolio turnover. They're a passive investment strategy that aims to generate returns similar to a broad market index. Lastly, let's talk about art. Investing in art might sound a little out of the box, but it's a real thing. Artwork can appreciate over time, and it's a tangible asset that you can enjoy while it potentially increases in value. However, investing in these assets isn't without risks. Commodity prices can be volatile. Index funds are subject to market performance, and the value of art can be subjective. It's essential to do your research and consider your risk tolerance. These unconventional assets offer unique investment opportunities, opening new avenues for wealth growth. To wrap up, it's clear that cash isn't the safest place for your money. Our journey through the world of assets has shown us that there are numerous ways to safeguard and grow your wealth. We've explored the dynamic world of stocks and bonds, delved into the tangible security of real estate and gold, and navigated the promising landscapes of mutual funds, ETFs, and cryptocurrencies. We've also touched on the unique opportunities presented by commodities, index funds, and even art. Each of these assets presents a unique opportunity to not only protect your wealth from the erosive forces of inflation and risk, but also to potentially grow it. Diversification is key, and having a mix of these assets in your portfolio could prove to be a game changer. So next time you think about stashing your cash, consider these assets instead. Remember, the best way to protect your wealth is to grow it.